Hi everybody, sorry I'm late. I was engaged in a meeting. So my name's Kerry Knoll. I'm one of the founders of Generation Mining. We're a copper and palladium project in Canada. And some of you who've maybe been investing in mining for a long time will recall one of my earlier companies about 20 years ago called Blue Pearl Mining. Blue Pearl famously started at 10 cents a share in 2004, and by 2007 it was trading at $25 a share. So it went up 250 times in 3 years. And I retired 20 years ago, and I've come out of retirement a few times, and I came out of retirement to start this company. And we started it in 2018, and the idea was to build a palladium mine and a copper mine in Canada, and I stick only to Canada now because I see some of these companies in different parts of the world having political problems and ownership problems. And the one thing in Canada we know, even though it's more expensive to build a mine, is that we will have ownership of the mine. We will continue to own it. So we're in northwestern Ontario, Canada. Ontario is the Mining Journal newspaper in London, England, chose the Ontario as the #1 place in the world to be building a mine today. So we're very fortunate for our location. We also have all of our permits. It took us 5 years to get our permits, and we have them all. We got them all last year. We're also trading at a very significant discount to our as you can see there, our discount to our net present value. Our net present value is about $1 billion Canadian dollars, and we're trading at only 200 million market cap. One of the fortunate things about our project is we have 5 different metals that we're going to produce. So we're going to produce palladium in #1, but also copper, and copper is very close to this amount of palladium. We also have platinum, and we have silver, and we have gold. So anytime one of the metals, while we're mining, if one of the metals is down in price, other ones are going to be up in price. So it's a good to have a big mix of metals. And where are we? We're just north of Lake Superior. Lake Superior is the largest lake in the world, and we're just north of that, right near, you can't see the details here, but there's a lot of mines all around us. We're a very, very popular mining area in Canada. And we're right on the Trans-Canada Highway. We're right on the National Railroad. We're right on the National Power Line. And there's an airport right on our property. And there's a town right next to the property. A lot of mines are built in very, very distant, difficult places. We're very fortunate to be where we are. And I won't talk too much about copper other than to say that, as I think you all know, copper is going to be coming into a vast shortage in the next 5 to 10 years. Nobody knows where it's all going to come from, the copper we're going to need. I won't get into the details of this slide or this slide, but this is palladium. So palladium is a unique element. Most of it is used in catalytic converters in cars. In fact, Germany is one of the largest consumers of palladium. But most of the palladium in the world comes from 2 places, from South Africa and Russia. And South Africa has serious problems with not enough electricity and not enough water. And of course, Russia has political problems. So if any one of these things goes sideways, palladium is because it has to be by law. In every single gasoline-powered car, you have to have platinum or palladium to clean the exhaust that comes out of the car. So we have a feasibility study that we did last year. It has a net present value of, is it showing here? I'll show here. This is Canadian dollars, so about just over $1 billion Canadian dollars. But at today's spot prices of metal, today's copper price, today's palladium price, we have a $2 billion net present value. And that's against our market cap of just over $200 million. Just a few things to point out here. We have our cost to produce these metals The cost to produce palladium is going to be just under $800 an ounce. Palladium's trading around $1,500 an ounce. And our cost to produce a pound of copper is $2. And the lovely thing about this project is that the copper is enough to pay all of our operating costs. So the 200,000 ounces of platinum and palladium that we're going to get per year will come for free. So that's the profit, and that's going to be EBITDA of profit of more than $400 million US dollars per year at this mine. And this is why. One of the things that, I'm going to just go back a slide. One of the things I didn't mention was the payback. So here. So at our feasibility study that was done a year ago, at the metal price then, our payback was 1.9 years. A typical mine takes 3 to 4 years to pay back its initial capital. And at today's spot price, our payback is 1.3 years. And this shows why. So this is the second year of production. That's our revenue here, $1.2 billion revenue, and almost $1 billion profit in the first full year of production. And that's why our payback is such a short period of time. So even though we're borrowing most of the money, we're borrowing $600 million to build this mine, we will be able to pay that back in about a year and a half after we start production. And again, this is the cash flow over the life of the mine. And again, this is after paying back all the debt and everything, and it's still several $100 million per year. And this kind of outlines what we've done. So before 2025, we did some studies, we did some permitting, but we weren't successful getting our permits then. And finally last year, 2025, we got our permits. 2026, we started something called detailed engineering. Before you build a mine, you have to do a detailed engineering. It's about 6 months of work, and it's about $20 million worth of engineering. We're doing that right now. We started in February. We're going to be finished that in July or August, and we intend to begin construction in September of this year. So where are we going to get all the money to do this? We're a $200 million company, and we need $1 billion to build this mine. So where does a little company get the money? Well, the first thing is I've done this before. I've built 4 mines, including I raised $700 million for Blue Pearl, the company I mentioned before. So we have a streaming deal with a company called Wheaton Precious Metals. Back in 1991, I founded a company called Wheaton River, and Wheaton Precious Metals was a subsidiary of that company. So I've been involved with that company since more than 30 years. Wheaton is agreed to give us $240 million towards building this mine. Wheaton it has a market capitalization of almost $100 billion. It's a very large company. I think it's the largest company in Western Canada today. Caterpillar and Komatsu, these are heavy equipment manufacturers, are going to loan us $130 million, basically lease us the equipment, so we don't have to put any money down on the fleet of equipment we need to start mining. And then a syndicate of banks, ING, Société Générale, and the Export Development Corporation in Canada, the 3 of them have agreed to give us $400 million US dollars towards building our mine. Another leading financial institution that's controlled by the government of Canada has agreed to give us another $200 million. So that's pretty much all of the money that we need to build this mine. It's all been arranged. We're going to be announcing over the next several months the different milestones. The biggest one coming is something called bank credit approval. So the banks have agreed to give us the money, but they have to get their credit department to approve the loan. That's happening right now. We're expecting that to happen before the end of April, so in the next few weeks. And then after that, the rest of the money will all fall into place, again allowing us to start construction in September. And this is just a comparison of the price of our stock to our net asset value, comparing us to a bunch of other base metal companies. And as you can see, we're valued at the very low end. And I think the reason that we're valued at the low end is, first of all, I think that a lot of investors don't believe that a company our size can raise $1 billion, but we can, and you'll see that we can. And the other reason, I think, is that I think a lot of people don't really understand the palladium market. And I didn't get too much detail into the palladium market, but palladium has been in a deficit since 2012. The only way that the palladium is not in a massive shortage is that people recycle, and it mainly comes from old jewelry. The white gold, a lot of that was made from palladium and platinum, and so that's where the supply is coming from. But at some point that dries up. So we've got a situation where they're not mining enough in the world as they're consuming in the world, including recycling. So it's a great commodity to have. Unfortunately, there's no companies in Canada mining palladium, so people don't really understand it. But it's not like gold or copper, where there's hundreds of companies around the world mining it. There's only a few, and most of them are in South Africa. But anyways, that's our value, and that's the opportunity. And this is something you might have come across before. It's called the Lassonde curve. So this is the life of a mining company. So at the very start, and the green part there, that's the discovery of the mine. But the problem when you discover a mine is that's when your problems are beginning, because you have to do a feasibility study, and you have to do permitting, and that can take anywhere from 5 to 10 years. And once you get through that and you start building, then the value starts increasing again. And there's a company called Foran that just got taken over by Eldorado in Canada. Is a great example of that. It went from a value of about $500 million to a value of $4 billion once their mine was constructed. And there's lots of other examples of that. And so that's the opportunity. That's where we're at, and that's where we hope we're going over the next 2 years. It's about a 2-year construction period. And this is the company I just mentioned, Foran. So it's about the same size mine as us, mostly copper with some other metals similar to us, and yet they're a $4 billion company because their mine is finished construction, and they got recently taken over by Eldorado, so that also validated the model. So Eldorado waited until their mine was finished being built before they decided to take them over. I won't get into the names of all the people. This is on our website, but we've built a team of very, very experienced people. It's a team of people that all worked together building a mine before in Ontario for the diamond mining company De Beers, and De Beers was famously one of the best operators in the world. And so these people have now joined us and are going to be building the mine for us. So this finishes it up. We've got 319 million shares outstanding. We've got some very smart shareholders. Our largest shareholder is Sibanye, which is one of the largest platinum palladium companies in the world in South Africa. Management and directors own a lot of the shares. Eric Sprott, a mining billionaire who I've been working with for almost 40 years, owns 5% of the company. And Wheaton Precious Metals that I mentioned before also owns 5% of the company. So some very smart people have invested in this company. I don't know the format. Is there normally questions? Because I have about a minute left, and that's the end of the presentation. Are there any questions anybody want to ask? And you can also come by our booth, is booth 13, right near the restaurant at the front, if you want to come by and ask us any more questions. Other than that, I appreciate you coming out on a sunny Saturday morning, and thanks for your interest.